Will the real estate market crash? This is the question I get asked most often nowadays. And in this video, I'm gonna give you my thoughts and opinions on what's going on and if the real estate market will crash. And I'm gonna loop in one thing that almost nobody's talking about that could change the outcome of the market crashing or not. And I'm gonna give you my final thoughts once I've laid everything out. This is Austin Rutherford. Appreciate you being here. Make sure you smash that like button below. So there's a few huge differences between the real estate market now and the real estate market in '08, right? There's a lot of benefits right now. There's a lot of negatives right now, and the unknown of, is it gonna crash? So let's dive into it. So the positives that are going on right now, the good things saying that the market will not crash, one of them is money. If you look at this chart here, this chart is the money supply for the United States. And if you look at the chart, you can see how low it was before COVID and how high it is right now, which means that 40% of all the money in the United States has been printed in the last 2 years. So the US has been around for hundreds and hundreds of years. And in the last 2 years, we've printed 40% of all money in circulation in a 2-year period. Think about that. Like, we've literally been giving out money like candy. We have the PPP loans, we have the EIDL loans, we have the ERC loans, we have unemployment, we have money going out to anybody and everybody for almost any reason right now. And if you think about it, that money tends to after it's given out to everybody, it tends to always go back to the 1%, right? It finds a way to go back to the 1%. There's a saying out there, if you took all the money away from the 1% and gave it to everybody else, within 5 to 10 years, it'd be right back up to the 1%. Because some people understand money and investing and finance, and other people just have no idea. So all the money that's been out there, inevitably it's gonna go back to the 1% over time. And then what does the 1% do with their money? They invest it, they own assets, they understand the game. So where are they putting their money at? Stocks, crypto, real estate, things that appreciate as inflation goes up. If you print that much money into the US, inflation is inevitable. Like 1000% inflation is happening. So you wanna be in inflation hedge assets like real estate, like stocks, like crypto, because those tend to go up in value as inflation goes up as well. So all that money is now going to the 1%, and then it's gonna be funneled back into assets that will continue to go up over time. It's super simple math, right? If you add 40% of supply, 40% of money being printed, the value of the dollar goes down 40%, the value of the assets go up 40%. It's very simple math, right? It does not happen overnight, but over time, that is where we're headed. So that's the first thing. The second thing is simple supply and demand. So if you talk to anybody out there, everybody's talking about how much of a housing supply shortage that we have. If you look at all these articles here, this article after article after article after article, all talking about the need for housing or the current shortage of housing going around the United States right now. So with that, supply and demand, right? Supply is the amount of housing available. The demand is the amount of people needing a house. So if there's a short in supply, and wait till the next one, this is even gonna blow your mind even crazier how short that supply really is, but if there's a shortage in supply and the demand is more, the price goes up. People are willing to pay more. If the supply is abundant and the demand is very scarce, the price goes down because there's less demand than there is supply. So we're in the inverse. We have less supply and more demand, which means that prices go up. Look, I've personally been looking for a house for the last 5 or so months now. Every house that we've looked at, I've looked at what they purchased it for 1, 2, 3, 4 years prior, and it's half the amount that they're selling for now. So they're making 20 to 30% per year in appreciation, which is insane. And that's happening across the country right now. Think of it like this. If Tesla started making 1 car a day instead of thousands a day, they would have a very crazy supply shortage and an insane amount of demand. That would lead the prices to go up because people are willing to pay more money since there's less available. That's the same exact thing that's happening in the housing market right now. There's a supply shortage, as you can see from all the articles, and there's a high demand of people wanting to buy properties. And the third one are hedge funds. This is what a lot of people aren't talking about right now because it just kind of just disappears, right? But what are hedge funds, right? These are Wall Street backed money for the most part. There's a lot of other different types of hedge funds out there, but Wall Street backed money that are going in, flooding into the single family residential class. Think about this. Mostly all the apartments are owned by hedge funds. Now all the single family houses that were homeowners are now starting to be owned by hedge funds. I'm gonna give you a couple stats here and really try to understand what this means going forward. Their goal in 2022 is to buy another 150 to 250,000 single family houses across the country. And just to put it into perspective for you, last year, in 2021, they bought thousands and tens of thousands of houses, a lot of houses. I know a lot of people that sold a lot of houses to the hedge fund, but the hedge funds only hit half of their goals for 2021. They only bought half of the amount of houses that they needed to buy to keep up with the money that they have coming in. So going into 2022, they're 50% behind in purchases. What makes anybody think that they're going to slow down buying houses in the year 2022, right? If they're 50% behind, they have to buy more houses. It's simple math. The hedge fund's goal is to own 25% of the single family class. So all properties that are within their wheelhouse, which is like entry level and mid-level houses, they're not buying like multi-million dollar mega mansions, but entry level, mid-level houses where people rent, their goal is to own 25% of the market. So if there's 25% of rentals, let's say there's 50% of homeowners, and then another 25% of independent landlords, people like you and I that own some rental properties. You don't think they can set the market? You don't think they have enough money in the market to determine the value of homes and the rental rates of homes? When you have that much money moving behind you, you can literally set the market. Perfect example, I know somebody. There was a hedge fund. They went into a neighborhood of a few hundred houses. They ended up buying 60 houses in that neighborhood in a 90-day period. And within 90 days, the value of that neighborhood literally went from $200,000 to $290,000 within 90 days. And that's great for the other people that live in the neighborhood because they just theoretically made $90,000 on paper. But what about the affordability? What about the increase? What about the housing shortage? It's getting worse and worse and worse and worse, which means, again, simple supply and demand. Values of properties will continue to go up when there's a shortage in supply. And the supply only gets more scarce the more houses that these hedge funds continue to buy. And I can promise you, hedge funds do not plan on slowing down anytime soon. Everybody I've talked to, they're trying to get their hands on as many properties as possible. So those are all the reasons that I believe that the real estate market is not going to crash just based on those three things. But there is a downside to this. There's a negative. There's a potential for a crash as well. So let's dive into those things. The first one is war. Everybody knows what's going on with Russia and Ukraine right now, and a lot of it depends on how much that escalates, right? If we go into a World War III, yeah, there's gonna be a lot of repercussions from that, a lot. But if things start kind of sizzle out and things somewhat go back to normal relatively quickly, then we might not see the massive repercussions from a war, negative repercussions from a war. War rattles the entire globe because everybody starts getting involved, they start spending money there, they start moving money out of other places like assets, putting it into war, and a lot of things can go astray from that. So that's a huge variable in play right now that nobody has an answer to. We just gotta wait and see and play that one out. The second one is interest rates. And if you look at these articles here, the Fed plans to raise interest rates. We don't know exactly how many times or exactly how much. We kind of have an understanding or a gauge of that. But every article you see is raising interest, raising interest rates, raising interest rates, raising interest rates. So inevitably, it looks like the interest rates are going to continue to go up. Now, again, nobody knows how much, how fast, how quickly those rates are going to go up. If the interest rates go from like 1% to 10%, yes, we're going to have a massive crash overnight. Now, if interest rates go from like 1% to 2 or 2.5 or something like that, we might not see a mega crash, we might just see a leveling off. So these are all things that we do not have the answers to today. It's all things that we can speculate on into the future, but nobody knows. Literally everybody's guessing. The person raising the interest rates doesn't even know. They're raising it this month, and the next month they might raise it again. The month after that, they might have to decrease it because things hit the fan. Like nobody knows those answers. But again, the increase of interest rates is a huge variable because what happens is homeowners, people that are trying to buy houses, with lower interest rates, they can afford more home. As the interest rates increase, the value of the home that they can afford decreases. So interest rate goes up, the value that they can afford goes down. So potentially, if interest rates go too high, they can't afford as much house, which means values of homes will then start to decrease. Because the higher the interest rate is, the more you have to pay every single month in a mortgage. The lower the interest rate is, the less you have to pay. So the less you have to pay, the more you can afford. Again, this is something that nobody knows the answer to. It will only tell over time what this ends up looking like. But all of this across the board is leading to a massive unaffordability problem here in the United States. People are starting to get priced out. Home values are going through the roof. Rent is increasing like crazy. And a lot of people simply can't afford to live where they've been living at. And nowadays, a lot of the younger generation, the 20-ish year olds, don't really want to own houses, right? If you run a survey on them, A lot of them don't even want to own houses. They want to rent. They want to be mobile. They don't want to be tied down to a specific city or a specific location for an extended period of time. So it's cool, rent, that's fine. Just understand as rent increases as well, because rent's inevitably going to increase over time, right? It only goes up. You got to understand that you're at the mercy of your landlord. You don't own anything. You don't have anything locked in. Every year that rent can continue to increase. So those renters out there have to understand that there is a risk associated with that as well. So I wasn't around in 08, but here's my conclusion, right? I think there's a lot of differences between the two from the people that I've talked to and the research that I've done now and then, 2008, a lot of differences. But if the war starts to fade and everything kind of goes back to normal and peace, and the interest rates do not get racketed up like crazy, I don't think we're going to have a crash, because we have supply shortages, we have hedge funds coming in, we have a lot of money pouring into this space. Now, if war kicks up and it's World War III and interest rates increase, then yes, I do think we could potentially see a crash. I don't think it'll be as bad as 08. I could be wrong, but I do think it'll be a crash. If things kind of stay even keel right now, I think we'll have the market's been like this, right? I think we'll have a little leveling off and kind of see a little bit of flat line. But again, nobody knows at the end of the day. There's too many variables in play that nobody knows the answers to. So comment below, let me know what your thoughts are. If you agree or disagree, while you're down there, smash that like button for the YouTube algorithm. Make sure you hit that subscribe and notification bell so you can get all this content going forward. As always, appreciate you being here. We'll see you on the next one.